Success in trading doesn't come from predicting the future. It comes from preparing for it. Hey everyone, welcome back to Your Nifty Guy. Tomorrow is weekly expiry of Nifty, and that means the market could throw some really sharp moves our way. In today's video, I'll walk you through my detailed trade plan based purely on price action and key levels, no noise, no guesswork. If you find value in clear and simplified analysis, make sure to like the video, subscribe to the channel if you haven't already, and drop a comment below on whatever your thoughts are about this video. Let's decode expiry day together. Let's get straight to the charts. And as usual, our video will be divided into two parts. The first part will be covering about what we had planned yesterday versus what actually happened and how did we play it out. And in the second part, we'll be focusing on tomorrow, which is the Nifty weekly expiry, and we'll be planning for it. So today, again, the markets opened flat. And I was assuming and hoping that we'll get this particular trade, which will be closing above this particular trend line, above this particular spring high, which we had marked, and then we can take a long trade, and then around these levels we could have got an opportunity for a short trade, and that was my trade plan that I was looking at. And as usual, Nifty or market will definitely be not be willing to give you what you want, but they will be surprising you. So if you look closely here, a double top was formed. So from yesterday's this swing high to this low, again markets reached here and then again here. So this was a double top, which is a W on a put premium chart. So this was my first trade of the day, wherein I had taken a put right at the short of at the break of the day's low, which is the first 5 minutes candle. I had taken a put around here. The stop loss was right above day's high. Market gave us a new day's low, wherein I moved my stop loss around here, which got triggered in the following subsequent time frame, and then the market again went ahead and would have given good targets. But again, a system is a system, and there will be days like this, and you need to follow the system no matter what. And that was the reason once my stop loss around here was triggered, I gladly accepted it. And even though market did again go back in my favor, and in case if I would have been holding the trade, it would have given me a good reward. But this is where the important psychology and discipline comes into impact. And this is a long-term thing, not a one-off game, wherein I am not assuming that the markets will be ticking in my stop loss and then going again in my favor. My thing is, what if the market has reversed from here and it is going all the way up here? What would happen to my position then? So that is exactly why stop losses are placed at key important levels. And once triggered, you have to accept it no matter what happens and then gladly move on to the next set of trade. So this was almost a cost exit because we had entered around here and the exit was around here. But then there was minor loss on this particular position. There's no problem. There will be trades like this, like I mentioned, even though you are doing everything right, you're doing everything by the book. There will be days when you will just be a part of a liquidity hunt. So this was the first trade that I had taken. And again, a long setup kind of formed around here. But then again, I would like to call this particular market a hodgepodge market with no clear price action. And as you can see, again, the markets, although did move up, there are lots of wicks. So market went down, gave a closing back up again. Here it went up, gave us a lot of wicks around here. And that is why the price action is not clear. And I hesitated from participating in any long trades around here. Now, the second trade of the day for me was this particular trade, wherein again, this was a double top pattern, which I had entered around here. Stop loss was big, definitely. It was up above here, but then the market gave a good target immediately. And once I saw the doji after this particular large wick candle and a green candle, I exited around here. I managed to close the day in green, post this stop loss trade at the start of the day. Now, what was the reason of taking this particular short trade is if you look at the market structure, like I always say, pay close attention to the market structure. If you look at the market structure, right? The market was clearly in a lower high, lower low formation. Around here, definitely a higher low was formed, but then again, obviously, we are trading the break of this particular low. So that is the trade, which is the double top, and definitely it makes all the more sense because this high was not breached while this low was being broken. So it was a good probability trade, not a very high probable trade, but definitely a good probable trade, and that was the reason it was to be taken. And again, obviously, you after the markets went around here, it also gave us a pullback. So yeah, if you would have entered on this like me, if you had entered right at the break of this particular candle, your stop loss was placed around here. But after this pullback, when the market moved down, the stop loss could easily have been shifted around here, which I did. But then again, my trailing stop loss method is something which I use, and that got triggered in this 245 candle, and this is where I close the position, ending the day in green, even after taking a stop loss trade in the morning. So this is what system-based trading is all about. And if you want to sustain for a long term in the market, you need to stick to your rules, you need to stick to your system. So this is the reason I explain every single trade that I take, whether it is a stop loss trade, whether it is a profitable trade, or even I speak about my experiences, even when on days which are no trading days, right? Even when I have not taken any particular trade, I will still be going ahead and explaining what was going on in my mind, so that you know what exactly is playing in my mind while we are in the live market. So I hope the two trades that I had taken, one stop loss, one with profit, are very, very clear, and the logic, psychology behind everything is clear. We'll be now shifting towards planning the day expiry trade for tomorrow. Once again, before I plan the trade, I know most people don't watch the video till the end. That is the reason I am giving this disclaimer before we plan the trade for tomorrow. Tomorrow is the weekly expiry of Nifty. Anybody who is into options buying, who is trading Nifty expiry tomorrow, please make sure to shift your trading to the 14th August expiry and do not trade in tomorrow's expiry. The reason is extremely, extremely simple. You might be paying a slightly higher premium for your entries, but you will be safeguarding your capital by just simply shifting to the next expiry. Might have to reduce the quantity, but again, this is something which is a personal rule that I follow, and I assume anybody who would be sticking to this particular rule in the longer run will be benefiting from it. So just a reminder from my end, tomorrow's expiry, except for the expiry special trade setup that I personally use, and I have also given update about it in the last month's monthly expiry video. So in case if anybody is not aware of it, you can go back and check that video for the expiry special trade. In case I am taking that expiry special trade, in case see something happening on that front, right? In case I see the setup being formed, only then will I be taking that particular trade, and only then will I be using tomorrow's expiry, which is and obviously that trade is post 2 p.m. So that is kind of like a hero zero trade wherein you are risking maybe a part of whatever you have earned during the last Friday till this, and you're risking a small part of it to get a good reward trade. And that is something which again all the boxes have to be ticked so that that particular trade can be taken. So anybody who has not watched the video can go and watch. And in case if you are new to this particular setup, my advice would be to watch this particular setup for a couple of weeks before actually trading on it. So for tomorrow, and again, as usual, the market is again sideways. It is the third day that we are still inside the 1st August candle. So, which I was assuming that the markets will remain volatile to sideways for some time before deciding again which direction it will be going ahead with. This level still remains crucial and important for us because no new low has been formed. On a 15 minutes time frame, this is the trend line which is coming in. And if you see, this is kind of again a minor parallel channel in which the price is moving, but I don't want to pay close attention to it. Only the top trend line would be of beneficial importance to me while planning my trades for tomorrow. Tomorrow, again, of course, as I told, this particular low, the 1st August low, which is very, very close to today's low as well, is of key importance to us. Any candle close below this with a pullback, we can look at creating a short position. Above this particular swing high, we can look for a long trade. Any negative price action around this should be used to again take a short position in the market. Again, the price action has to confirm and be negative so that you can take a short position around here. But a long position only around here. In case if I am taking a long position around here, I will be taking it with smaller quantities, and I will be trying to book my positions around this particular position, which is a resistance zone for us. And again, which will be looking the most high probable trade for tomorrow will be again a flattish to minor gap up, minor gap down opening, and then we break down below this low, and then with a pullback we can take a short position. So that will be the most high probable trade setup for tomorrow. But then again, we do not predict anything. We are simply planning for all the possible scenarios which can play out in the market, and then based on what is happening in the live markets, we will be taking our bets. So I hope the plan of action is clear and simple. In between this range, please try to avoid taking any trades. Of course, if you see a double top or anything and double bottom or anything, you can obviously be fine-tuning your trade based on the setup that you use. But then again, make sure that all the particular boxes that the trade setup has, all the prior preset conditions are completely ticked off before you actually take that particular trade. So yeah, that's it from my side for today. This is your Nifty Guy signing off for today. I'll see you guys again tomorrow post the market. Do not forget to like the video, subscribe to the channel, and also put down anything that you might have to say in the comments box. Thanks for watching. Cheers.